Welcome to Whytax, your trusted guide to simplifying tax, finance, and compliance in India. If you're a student, tax professional, business owner, or just someone curious about how taxation works, you're in the right place. In today's video, we're diving deep into Section 194LA, a key TDS provision you must understand if land or property is being compulsorily acquired by the government. Section 194LA of the Income Tax Act, 1961, deals with TDS on compensation paid during compulsory acquisition of certain immovable properties by the government or its authorities. This section applies when the government, PSU, or authority acquires immovable property and compensates a resident individual or HFF. Let's break it down. TDS under 194LA will apply when all of these are true. The payee is a resident individual or HUF. Payment is for compulsory acquisition. The property is not agricultural land, and compensation paid exceeds 2,000 and 50,000 rupees in a financial year. Immovable property under 1940 LA includes land, except agricultural land, buildings or parts of buildings, and rights attached to such properties. Agricultural land is excluded. But wait, not all land that looks agricultural qualifies. To be exempt, the land must be located outside specified urban areas. Urban agricultural land is not exempt from TDS. If the land lies within 2 to 8 kilometers of a municipality, depending on the population, it's considered urban. The TDS rate under Section 194LA is 10% if PAN is furnished and 20% if PAN is not provided or invalid. TDS must be deducted at the time of payment of compensation, not when it's booked or awarded. No TDS is required if payment less than 2.5 lakh, land is rural agricultural land, compensation is exempt under RFCTLARR Act 2013, or payee is a non-resident covered under Section 195. If the land is acquired under the Right to Fair Compensation and Transparency in Land Acquisition Act, and the compensation is exempt U Section 96, TDS is not required. Here's your compliance roadmap. Form 26Q for reporting. TDS deposit to be made within 30 days. Issue Form 16A to the deductee, and quarterly TDS return deadlines apply. If TDS isn't deducted or deposited correctly, interest at 1% or 1.5% per month, penalty of 200 rupees day for late filing, penalty up to 10,000 rupees for incorrect PAN, and disallowance of expenses under 40A IA. Example, Mr. A receives 10 lakhs from NHAI for his plot. It's urban land and he gives a valid PAN. TDS equals 10% of 10 lakhs equals 1 lakh. Mr. A receives 9 lakhs net and Form 16A is issued. Let's compare Section 194LA for government compensation at 10%, Section 194IA for property sale at 1%, and Section 195 for payments to NRIs with varying rates. If this helped you understand Section 194LA, then don't forget to like the video, share it with fellow professionals and students, subscribe to Whytax, and comment below. Until next time, keep learning, stay compliant, and simplify your tax life with Whytax.